Good morning, folks, and welcome to the pre-market insight for February 20th, 2020. We are sitting just underneath all-time highs. Let's go. So we're taking a look at the the S&P 500 futures, and as you can see, we are building a lot of value between this. If we zoom out onto the longer-term time frame on the 4-hour, you can see that we are building value between this 33.97 and 3360 level, which speaks very bullishly for the market's prospects, because you would have expected, if this were to be a start of a longer term sustained short opportunity, that we would have had much more of a visceral reaction at these highs. Instead, we are simply having very orderly selling back into support, and buyers are showing up exactly where they should at key levels of intervention. And do note that if we even take it back to the monthly chart, we spoke about the fact that we were in a broadening wedge formation for the last 2 years between 18 and 19. And in fact, all we did in 2019 was recoup the losses that we had in 2018 from this epic run that we had in 2017. And so we hypothesized that coming into 2020, with this monthly candle breaking above the highs at around 30, 30, 40, we possibly could be in for another 2017 like run to the upside. And thus far, on the monthly time frame, that exact hypothesis is playing out. Strong bullish bars finishing on the highs, strong bullish bars finishing on the highs, even though we have some signs of selling coming in. Then you have this one monthly bar with signs of possible indecision, signs of distribution at the highs, as we pointed out. But then we're following up this bar with a very bullish bar, which is now again just at the top of its range. So if we do finish this month with another uh, bullish bar that finishes convincingly on the highs, then definitively we would be looking for more upside going into 2Q and year's end. That being said, this is a presidential year. We do have election headlines, we do have virus scares, we do have rumbling news and geopolitical um, events that can possibly derail the market's advance at a moment's notice. And so, keeping it simple, Smarty, what do we need to look for and what do we need to pay attention to going forward? Well, on the weekly time frame thus far, as you can see, we had this bit of selling here, but we convincingly broke above that, and now we're having a bit of a pause, a bit of an indecision candle opening where we closed last week. And so for this week in particular, it is going to be really important for us to close above this 3340 level to ensure that we have some continued momentum to the upside. Now, last night we had a bit of volatility in the market, possibly coming from the Democratic debate and people speculating as to the probabilities of who may indeed be running against President Trump, and the scenarios of whose business policies will win out and what that looks for in the market. So we actually made a new all-time high at 33.97 in the after hours, but we quickly sold off all the way back down into 33.76. Now, I say we sold off into 76, but in the overall context and scheme of things, this is a really gentle and orderly pullback that may get bought up once again in the regular trading hours once we, if and when we come back to test this overnight low. If the overnight low does not hold, we've spoken about the fact that ranges are getting a lot more expansive than they have been before. Definitively, if sellers want to rear their heads and bring us back down into 33 this 33.42 level that we were talking about as the prior week's close, then they have the opportunity to do that. But because the ball is in the bull's court, given the price action that we've seen over the last several months, the extent of that downside may just be this uh, intermediate level of support at around 33.54. Keep it simple, smarty. Be safe out there today, guys.